Alright, I'm going to go over some markets, starting with the oil. What I'm doing are trend reviews. This is one of the best ways to learn how to trade, is just by reviewing the past trends. Anyway, so this was the initial change of behavior, or the initial impulse, or the initial sign of strength, followed by low volume, followed by the breakout, and then you just had to pull back to test. And from this area, what you see is a thrust. That was the markup bar which initiated all of this. All what you see here is a result of this bar. This bar is the launching pad for the trend. So that initiated the trend. The key things to remember is that this was no normal breakout. These are accumulation backed breakouts, meaning there are different types of breakouts. There's breakouts that are just going over a certain level. Those breakouts don't really mean much. What you want to see is accumulation or distribution backed breakouts, meaning in the background there is buying. 1, 2, 3, 4. That's buying, that's accumulation, and that is then confirmed by some type of breakout, either this or this. So this type of breakout with big range is critical when it's backed by accumulation right here. Same thing for distribution. What you have is, this was the initial distribution, 94 down, and that was the breakdown right over here. So this is relevant because of this. That means the sellers had a campaign. They were selling up here, and then they broke the market, it took it down. Then they accumulated, and then they broke the market up, and that makes it go up. This is one of the most important things, at least for me, that I've learned. I'm going to draw a little diagram. The most important chart in trading, in my point of view, the most important chart in trading is this. This here, you have accumulation. Usually what that means is that once it gets to a low, there's going to be buying. There's going to be a buying wave. The second thing to note is that there's going to be testing. So you have your accumulation, then you have your testing, and then boom, you have the breakout. And this right here should be low volume testing. Low volume testing in this way sets up support. So if you accumulation, then you have low volume, meaning there's nothing more left to accumulate, that this greedy bastard put everything, and there's nothing here. That's why low volume is an indication to him saying, hey you, there's nothing left to buy. You've bought everything already. And that's what they want. They want to buy until the entire area has no more to sell. That's when they know, alright, now I can mark up because I got everything. They always want to check for a lack of supply, because if there's supply here, that means they haven't bought everything, and as they mark up, the supply can come in again and break the campaign. So the idea is to buy until there's nothing left and then mark up. So this breakout will initiate the markup phase. Over here at the top, what's going to happen is you're going to have your sign of weakness, which is also called distribution or change of behavior. Then again, they're going to test to see if they got everything. Nope, there's nothing left to buy. Low volume testing means there's nothing left to buy. So what will happen is they'll break the market, and that would be your breakout, these breakouts, since they're accumulation and distribution backed, they're referred to the markup bar. What the markup bar does is initiates the markup phase of trend, and this breakout is referred to the markdown bar, which initiates the markdown phase of the trend. So in my opinion, this is the most important chart in the market. You'll see this chart in old school technical analysis books. But what it really means is that this is nothing more. This is not different than any other business. And in any business, what they want to do is buy low and sell high. The question is, how is that done? This is how it's done. They buy low until there is no more left to buy. Until there is no more left. And they sell high until there is no more left. And that is the point where the break occurs. And typically the break takes out the low of the selling wave or the high of the buying wave. Alright, that's really important, because these accumulation or distribution back breakouts, and then it's game over. The only time this thing fails is when it's going into a very strong support, untested support level. So you had a lot of heavy buying here, and it goes there, then it stops. So at a very strong support level, all it really did in that case was it didn't initiate a trend, it just initiated a pullback. So the thing is, in strong uptrends, when this appears, all they're doing is, there's nothing left to sell, and they sell the top, and then over here they'll just reaccumulate. So this will go back, and it'll just be a pullback when this is falling into strong support or resistance. Or if it's a counter trend, that is all that it's doing is testing a prior breakout. So test of a breakout. These are the two conditions where this will reverse. It will work, but it'll only go down to a support level, or it will reverse at a breakout level. So testing a breakout. So this is extremely important, because this is really the theory of buying and selling, or supply and demand, accumulation, distribution. This is the heart of it right here. Everything else that you see is I don't know what it is. Alright, so going back here, as you can see, this is the accumulation, but you don't know it's accumulation until this. And what will that do? It initiates the markup phase. So it initiated the markup phase, and then what you had was this selling. Now notice, what's the volume here? The volume here is 94. What's the volume here? 95. Does that mean these guys are getting out? Well, we don't really know, because they had more accumulation, 99, and I need to see selling comparative. But I think a significant portion of whoever accumulated did get out. At least these guys, they got out. Now we still need to know what this is, 99, because it could be reaccumulation. 95 down, 99 up. They could just sell and buy it all back, or some other group could come in and just buy it all back. They saw, oh yeah, these guys are selling, let me just buy it all and take the market higher. So we don't really know what's going to happen. All we know is currently it's in a range. So all you really know at this point is currently it is in a range, and let me get rid of all this shit. Yeah, and this thrust here is important. Why? Because it's preceded by low volume. That means what? They bought everything until there is nothing left to buy, and then they moved it up. And even this 47 is important because someone's selling but someone else is buying. 47 is higher volume than 12, but it couldn't take it out. So what does that mean? That means someone's buying. Whoever's selling, someone else is buying at their price. So it's really too early to tell if the sellers are in control. In my opinion, it's really a 50-50. You don't buy or sell. You wait this out because there's no evidence of there's no confirmation. Next is the I get sick of writing all this shit. This is the Japanese yen. Again, what do you see? Accumulation. Do you know it's accumulation? You don't know, but you just see that they're buying waves, right? You don't know anything until this bar, which is preceded by low volume. Alright, and that occurs after the accumulation. So accumulate, but you don't know it's accumulation until it proves itself. Why? There's nothing else left to buy. They bought everything. That's how, you see, greed works for weak hands as well as strong hands. It doesn't, greed and fear and all that, it works with everyone. So the big players, they're influenced by greed just like everyone else. So they're greedy. They want to buy until there is nothing left to buy. Here, this says there's nothing left to buy. So, okay, I bought everything possible. You know, I bought everything there was. Now what am I going to do? Markup. Bang. That's the markup bar. And this is a critical bar because you're in an uptrend at this point. So this is the theory. This is my adaptation of Wyckoff. Or at least my understanding of it. And you see this work on many, most time frames, or at least the ones I've seen. So buy, nothing left to buy means I've accumulated everything. Now I'm ready to mark up prices so I could, I bought low, I want to sell high. Bang, right here, takes out this area. The high before the low is critical. For those who don't know, that's the most important level, is the high before the low in any downtrend. Why? Because it breaks trend if you get above there. And you also had a climax. Well, there's enough selling pressure in the background to show a big range selling. So thrust. Now what's going on, you make the high highs and then this area becomes support. You can buy within this area, no questions asked. Why? It's being defended. Who's defending it? These guys. Whoever did this, they bought all of this juice. Do you think they're going to let the market drop? No, they bought all of this and they want to dump it at higher levels. When you buy low, you want to sell high. You don't want the market to come down to the same area you bought because it would be break even for them. So their game is very clear. They bought and they're campaigning this time frame to make it go higher, or they're gonna dump it. What area? I don't know. It's typically an untested area, so could be here. That's where there's very strong selling. It could be even lower. I really don't know. But what you do know is that these guys came in with 31 down and 33 right back up. So is it possible that this right here was reaccumulated? Absolutely. Do a stop run right under this area, right? Because a lot of people see the breakout here. They have their stop here. Do the stop run right under here and reverse and buy 31 right back. That's why you see the print is 33. Anyway, next. Treasuries. This market is yeah, I can't really tell. You can't see that it's not accumulation backed. You want to see accumulation backed breakouts. And this, I mean, it's the same thing. If you really look at what the game they're playing here, just think of it from a perspective of any other business. What happened? Bing bling. See this? This big fat 1, 2, 3, 4, 5, 6. That's smart money print. All this volume comes in. Now what happens? Now what happens? This happens. That's important. 1, 2, 3, 4, 5, 6 bars in a row. They bought, and you know they're buying low. They're buying low, and then they break out. See that? They buy low, then they break out. 1, 2, 3, 4, 5, 6. Then what happens? Break out. Boom. What is that telling you? It's an accumulation backed breakout. Accumulation backed breakout is very specific type of a breakout. It's not, oh, let's just go above this level with a bar. No, what you want to see is the background. Is there accumulation? Because accumulation is done by smart money, or at least for that particular time frame. What they're doing is they're buying everything until there ain't nothing left to buy. Then they break out, and you know that these guys, they have a plan. They spent all this money to buy 60 times 1,000. What is that? Shit. 10,000. 600,000 contracts. So you figure it out. I think that's what it is. 60 times 10,000. Alright, so 600,000 contracts these guys bought. Now, you know how much each contract is? So, do you think that if they bought 600,000 contracts, 600,000, that they're just going to say, oh, okay, you know, let the market come down? Nope. If they're buying that kind of size, it's for a purpose, and that purpose is to make money. That's all it is. Now sometimes they might be covering shorts, and it's very difficult to tell also. I don't want to deal with that. But this, usually what they do is they wait for climaxing, wait for lack of interest in the market, they wait for it to meander, and it's at a low, and then they're like, okay, let's scoop up all the money, all the contracts. They bought a lot of contracts here, and remember, they buy until there's nothing left. Where's your evidence that there's nothing left? Right there. See that? That's your evidence. Look at that. Ain't nothing more to buy. They bought 600,000. There's nothing left to buy now, so they know they cleaned up the entire area, the entire level. They bought everything. Now they're gonna break out, and now they want to run a campaign, and that campaign is very simple: buy low, sell high. So I don't know where they're gonna dump, but you'll be able to see there's 60 out. Then there'll be a comparative, you know, maybe like 40 down or 50 down or whatever. But I don't really see that here. I see more buying. So I think they're taking it higher. So even though this is showing it's a downtrend with all these moving averages, moving averages, it's so stupid. That's the problem. You know, all these indicators are used to fool you. What you want to do is focus on the buying and the selling. Here's buying. Buying. You want to see how this broke? I don't have it. Whatever. I don't have enough data. Anyway, so buy huge. All this green juice right here, you buy. Buy everything from the lows until there's nothing left. Break out. Confirm the breakout. Again, you see that they tested again. After this, they tested again. Found nothing. First time, 8. Thrust. Break it back down. 7. Nothing. There's nothing left. Thrust. Now you might say, what is this 28? Don't worry about the 28. 28 is actually effort. So I'll explain that in a different video. But these are the sequences that are important. And just think about it again from any business perspective. What do greedy people, you know, with a lot of money do? Or like, you know, they're going in, they're buying wholesale. What do they want? They want to buy wholesale, and they want to buy everything. So it's very important you understand the concept of buying everything and how to detect that there's nothing left. And then they run the campaign. This is all campaign. This right here is a campaign. And now they're going to take this higher until you see supply, until they're like, okay, we made enough money, let's drop half the size or all of it. You'll see the print. Now the question is, who's this? You know, are these the same players here who, you know, they dropped and just reaccumulated? I really don't know. So long as this is not John Q. Public, you're okay. As soon as the public comes in, there's a problem. Because when the public, if you see this type of behavior at the top, that means that's public buying. If you see it at the bottom, it means it's smart money buying. Smart money only buys lows. They don't buy highs. So this kind at a high would mean the public is buying and they're in, and that means that, you know, these other dudes sold. So that's the way the game is played. Again, same thing. You had climaxing, then you had volume come in. It wasn't that much, but see that? It's not really that much. I think they broke it up into 3 waves. So this was the climax. Again, you see it's at a low. Climax is ending action. Dump. Buy some. And I think right, one of these was the breakout. Well, I don't know. Maybe this one. Probably that one. I think it was this one. Anyway, where's the evidence that there was nothing left to buy? It's very important to understand. There has to be nothing left to buy, otherwise you could be fooled into whatever. Anyway, so price goes up. This print is very important. Notice how this print is greater than all of the buying at the lows. Who buys the highs? Why is the print at the high greater than the print at the lows? Why? This is not smart money. Print at the high is greater than the print at the lows is a warning sign. If it's even comparative to the print at the lows, because smart money doesn't buy highs, it's the public. So that's the thing. Who's buying here? I don't think it's smart money. So if they're buying here 26 up, dump it. you know, and again you're seeing big prints. Who sells the highs? Smart money. So now you're in your range of distribution, okay, but we don't really know yet. Why don't we know yet? Because there has to be nothing left to sell. Like over here, there's nothing left to buy. Look at this. There's nothing left. That's clear evidence. There has to be nothing left to sell, and it has to break down with specifically a mark bar, markdown bar. When that happens, game over. The downtrend is going to begin. And the only thing that could stop it is if it hits a support level. I don't see any untested support levels here. Or if it's a counter trend, and I don't, you know, the dominant trend is down. So I don't, this is actually the counter. So that's what you want to see. They took it right to this area. Anyway, so they're in a lot of trouble here. Gold is in a lot of trouble. This selling wave is the highest wave since the trend. Look, this is the trend. That's the buying, red selling. Boom, 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 boom. This is the biggest selling wave in the entire trend. Biggest. What does that mean? If that's the biggest selling wave in the entire trend, what does that mean? It means strong hands. 31 times what? What the hell? 31 times 10,000 contracts. 310,000 dumped. So I think this thing is in. This thing is not just selling here. They're selling here. Bring it up 26, smash it back down. Bring it up again. Nothing left. Smash it back down. Now you want to see the right hand side. Nothing left to sell, and a breakdown, and it's going to be on a sell signal. In my book, and a lot of them work. This is the Dow. This really confused me. I can't read this shit, so fuck that. Over here, this is 38 down. This was heavy selling, but whoever was involved in this game, they basically sold, and someone else came in and is doing all of this. So I don't know who's the. This was initial selling, right? This was more selling, and this was a very critical point. This is the point that if you had a breakdown, it's supposed to look like this. And like a big red bar down, this could have initiated an entire downtrend. So someone came in right before that happened, and they did this. Okay, so initially you saw sellers were taking over, but someone came in and said, no you don't. And at the last point they came in and it bought up everything. You know, so what happens some of the time is that you have a group, you know, traders or whoever, and they're going to break the market. Their intention is to break the market, but they may have changed their mind, or another group comes in and says, no you don't, we're coming in, we're taking it all up, and they force these guys to cover. And when these guys are forced to cover, that's when you have a rally like this. This rally, it's not just buying. These sellers have to cover their positions. These sellers have to cover their positions, and that's what causes strong rallies. Short covering is like required for, it's typically two things: short covering and higher time frame players. when they come in, it can cause massive rallies. Yeah, they don't really look at this. So I'm going over the YM, gold, euro, notes, yen, and the C-Rood. Alright, I'm done.